If you were looking to buy a home or refinance your current mortgage, you're in luck.
Mortgage rates are at historic lows right now. The average 30-year fixed fell to 3.29% last week. It's even lower for a 15-year mortgage. The rock bottom rates come after the Federal Reserve announced an emergency rate cut because of market turmoil caused by the coronavirus outbreak. Bruce Helmer joins us now live to talk about whether looking for a new mortgage rate is a good idea for most people.
And you just said something that stuck out to me. You said you don't think they'll be this low again, right?
And I don't think they'll go any lower. Some people want to wait because they think Fed will cut the rate again. That doesn't mean mortgage rates will go down. I don't know that they'll ever be lower than this. I don't know that they'll go any lower. So in all this negative news, all this talk of volatility in the stock market was down almost 8% yesterday. There is positive news. Low interest rates are an opportunity for people to either refinance their mortgage or consolidate if they have onerous, bad, high-interest, non-deductible department store credit card debt. Maybe you can use the equity in your home to get a lower interest rate, amortize it over a longer period of time, maybe make it tax-deductible where otherwise it's not tax-deductible. So there's an opportunity right now for people.
The typical story on this is you've got to lower your rate by 1%.
That's not true.
Not true.
No, it's not true. What you really have to look at is if you consolidate debt or if you refi, what do you save on a monthly basis, and then what is your cost to do it? So as an example, if it costs you $2,000 to redo it, but you're going to save $200 a month, you'll be net ahead of the game in 10 months.
Which is good.
And then you ask yourself, am I going to stay in this house at least 10 months or more? So the interest rate savings is less important than the net. What are you spending? What are you saving?
Got it.
Okay, so what about high interest debt? Is this a time to kind of get at that?
Absolutely. So again, we coach people on this show, but they don't always listen to us, not to have balances on high interest credit cards. But if you do, if the holiday season did you in, or you put something on that credit card and you can't pay it, and you've got a lot of equity in your home, you might want to use that equity. Now, again, I never counsel people to increase their debt, but if it's debt that's already there and you can make it more efficient,
put it in
this
a
might,
different
this might be a great chance to do that.
Talk to a mortgage broker. There are a million online calculators, and they're never right.
Nope, you got to.
Just aren't. If taxes are wrong, the rate is wrong, the PMI, everything's always
find a mortgage broker that you trust and talk to more than one. I always tell people talk to 2 or 3 and tell them all you're talking to other people because there is margin on these deals and you want them to put their best foot forward.
Bruce, this is a very volatile time right now. I think people are freaking out, really.
Yeah, I think so
What's
too.
Your advice?
It's going to stay volatile, and again, at the end of the day, stocks at the close yesterday were down 19%. Remember, in 2008 or from late 7 to early 9, they were down almost 60%, and we came back from that. Stocks are long-term money, so take a deep breath, don't panic, and again, there's opportunity. Low interest rates or IRAs. If you had a $10,000 IRA and you were thinking about converting it to a Roth and you didn't want to pay the tax on $10,000, maybe now it's $8,200, maybe now you convert it and you can afford to pay the taxes. So there's opportunities in this volatile cycle.
It's a great idea.
Bruce, thank you.
Thank you so much, Bruce.
Take it easy, everybody.
All right.
Good luck.
Good luck.
Come on, Bruce.
You can see Bruce here on Mid-Morning every Tuesday, and you can get more financial advice on his show, Your Money, on WCCO Radio. Tune in Sunday mornings at 8 a.m.